With the Tesla stocks arriving at new levels, the organization has now persuaded the possibility to be valued at $40 trillion. Hi, everybody, and welcome back to All That Tesla Stock. What are these valuable open doors that could get this going? However, the bullish forecast begins from Morgan Stanley's MOC 5 Contemplations on the Mother of All CAPEX Cycles Exploration Report. What a respectable organization like Morgan Stanley needed to say is unforeseen. Also, in this video, we will uncover why this $40 trillion open door will make Tesla arrive at new levels. Keep close by until the finish to find out. Before we start, however, assuming you like this kind of happy, hit the like button, buy in and turn on warnings to push cutting edge on everything along on with Tesla. Morgan Stanley is a global monetary administrations organization that has practical experience in venture banking, protections, abundance the executives, and speculation the board. The association's workforce serve clients from everywhere in the world. This is a significant amount of cash. Furthermore, our principal worry with customary automakers is that they have a sizable industry focused on the gas-powered motor vehicle. Heritage automakers are endeavoring to serve two experts with this monstrous responsibility and EV, and they can serve one. Furthermore, on the off chance that it isn't EV, then, at that point, they will fail. Morgan Stanley accepts Tesla might be extraordinarily underestimated when it's viewed as an environmentally friendly power inland framework organization. They view Tesla as a definitive battery capital consumption play with $1 trillion market cap in their grip. As indicated by Morgan Stanley, energy development will be recharged because of two key occasions: war and expansion. They expect advancements over the course of the following half year that will, in a general sense, modify the story, encompassing what Tesla does, the business sectors it serves, its development profile, and the worldwide key repercussions of the biological system on which it sits. Morgan Stanley accepts that financial backers are starting to perceive Tesla's advantages in going directly to clients, while occupant automakers are prohibited from doing as such areas of strength for buy-seller establishment guidelines. This is something different that we concur with. Tesla might sell vehicles at whatever point they need. Heritage automakers use old-fashioned showrooms with problematic deals rehearses, as well as extra organizations and formality. Morgan Stanley accepts that bigger powers are driving the new multi-decade trillion-dollar battery capex cycle as globalization changes us into another stage set apart by expanded stresses over public safety. Financial backers should consider new energy supplies and supporting foundation. Battery capacity will be critical later on, and Tesla is ready to lead. Tesla will actually want to create a larger number of batteries than any other person, as per Musk, who has guaranteed that Tesla will really begin their own mining tasks, either by buying mining firms or by laying out their own mining tasks from inside. It's consoling that Morgan Stanley is thinking about Tesla's possibilities beyond the auto business. Notwithstanding, their value objectives and profit per share forecasts are puzzling and well beneath where we see them going before very long. Tesla fans are notable for their high valuations. Ron Nubelman, a notable Tesla bull, accepts the firm will accomplish a 3 to multiple times return in decade. Cathie Wood's long-term projection is $3,000, suggesting a market cap of $3 trillion. Tesla. It creates a nice deals for the quarter with huge year-on-year development over going before deals. Tesla assembled 305,000 vehicles and conveyed 310,000 vehicles for a yearly assembling speed of almost 1.2 million. Autos. Models S and X creation and conveyances have almost stopped, with 17% of new vehicles subject to rent bookkeeping. The very good quality extent of the organization is generally torpid until another model is created. Tesla's new Roadster could really assist with reviving this region of the business, yet it didn't, and there's no sign of that event anytime soon. The firm raised a ruckus over the impending Roadster, and the cutoff time has been more than once pushed back, with the ongoing evaluation sitting at 2023. It is not yet clear whether it will emerge 1 year from now. However, Tesla has a past filled with missing cutoff times. Notwithstanding, the business is unimportant to Tesla except if anything occurs. Following that, the Model S and X, these models are, as we would like to think, what molded Tesla into the company it is today. Nonetheless, the organization hasn't seen great execution in quite a while, and deals are just a little level of the business as of now. They add up to $2 or $3 billion consistently for the enterprise. Throughout the following year, financial backers will acquire a more prominent comprehension of how Tesla and different producers are basic to the progress away from petroleum products and towards environmentally friendly power, as indicated by Jonas. As per the specialist, almost $20 trillion to $40 trillion in collected capital use and research and development will be spent towards this objective over the course of the following 20 years. As indicated by him, just 3% of this has been designated and 1% spent hitherto. In spite of the fact that Tesla as of late overhauled the models, volume deals stay unobtrusive. We don't guess this position improving physically, particularly with the expanded first-in-class contest in the EV business from organizations like Clear, Rivian, BMW, and others. Then, at that point, they're self-driving like the Roadster. We trust the open door here is basically fume. Meta's metaverse business is the most comparable. Might the market one day at some point be colossal? Sure. Be that as it may, up to that point, we couldn't actually say whether and while it will exist, or on the other hand, in the event that it's in any event, going to have a sensible piece of the pie. Tesla has more than once pushed back its full self-driving plan, maddening clients who expected it sooner in the wake of buying expensive bundles. Basic plan botches in the organization's procedure, similar to the absence of LIBOR or purchaser testing, have cost the organization cash, however may likewise bring about it never beating its opposition. In conclusion, we show up at the Model 3 in May. These minimal expense variants are as of now the groundwork of Tesla's activities. They represent a greater part of creation development with a volume of more than 1 million vehicles each year. These organizations are huge by their own doing, and EV contention is warming up. However, up until this point, the opposition has come from the significant brands. The business hopes to end 2022 with a run rate assembling of multiple million vehicles each year, for the most part from these vehicles. With developing rivalry, we imagine Tesla progressing to a mass market maker. Toyota, the business chief in dependable, minimal expense vehicles, is a practical marker here, with 40 million yearly vehicle deals and a $280 billion market cap. Tesla's different activities incorporate energy stockpiling and private sun-oriented. Private sun-oriented has experienced specifically with a couple of percent portion of the overall industry, with a 2% piece of the pie. The organization has recently not stayed aware of the absolute sun-powered area. Rooftop sun-powered gives off an impression of being a little yet developing organization. The organization is looking to help productivity here. However, with 345 MW of private sunlight based in 2022 and arrangement expenses of 2 to 3 million for every MW, we have a strongly serious area with no valuable market position and $1 billion in low edge pay. The organization's energy stockpiling division obviously has more noteworthy commitment. The organization has encountered considerably more steady development and has arrived at roughly 4 MW introduced. In our current reality where battery request is consistently expanding, its megapack arrangement is exceptional. Tesla charges around $300 each kilowatt hour in the latest evaluating declarations, assessing an income of around $1 billion here as well. So we can see Tesla is doing great in this business and over the long haul as well. In any case, we don't really accept that it is a $1 trillion organization creator in this industry. Edges are low and licensed innovation assurance is missing by 2030. Request is anticipated to move toward 1 terawatt hour. On the off chance that Tesla accomplishes a 100% piece of the pie, it will produce $300 billion in income. In any case, what are your Tesla forecasts? Tell us down underneath. Gratitude for watching, and keeping in mind that you're still here, feel free to tap on one of these 2 recordings on your screen. See you there.